Kathy Wood's not the only one excited about this. You talk to venture capitalists out here in Silicon Valley. This really does seem to be the buzzword when it comes to cryptocurrency. So the idea is sort of exporting the most popular parts of Bitcoin, one being the transparency and the underlying technology, which is known as blockchain. You may have heard that term as well, using it for other parts of the economy. So you can think of lending, banking, things like mortgages, stock exchanges, and taking things that we use every day and putting them on a blockchain. And the most popular blockchain that folks are using or developers have turned to is known as Ethereum. That's also happens to be the second largest cryptocurrency, or it's called Ether. It's sort of associated with that blockchain. So you've got software developers working on a variety of different things, saying that it increases transparency, like Kathy Wood said, that you don't need a middleman. You don't need a toll collector. These software developers are really building these platforms and saying we can walk away. We don't need to be the central authority. Some have argued that that's not always the case. And a lot of these projects and startups are very early stage. So it is a little bit too soon to tell who are the winners at this point. And will this take off? And will regulators allow it to happen the way that the crypto community wants?
Okay, that's a great question. I want to get more into regulation in just a moment. But, James, first I wanted to ask you this looming question I had, which is if there is no middleman, if there is no central authority taking a spread here, how are people making money off of DeFi, or are there not? Are there actual investment opportunities to be had here?
No, that's a great question. I think if you look at many of these DeFi protocols, there's a mechanism baked into many of them to make spreads, right? So take something like Uniswap, where they take 30 basis point fees, right? 25 basis points of that goes to the liquidity providers. And then 5 basis points of that goes back to Uniswap, which they put in a fund that's, owned and controlled by the Uniswap token holders. So there still is a fee structure when you look at the DeFi ecosystem in terms of kind of collecting fees, right, for various types of transactions, and ultimately putting that in the hand of often token holders who kind of govern the protocol.
Okay, so going back to regulation, Kate, proponents of DeFi argue that these projects, by their nature, don't really need regulation, but the SEC doesn't seem so convinced of that. Some news just this week out of the SEC on its thoughts on DeFi. What kind of headwinds, though, does regulation pose to this area?
That's right. Regulators are paying pretty close attention to this area. Like we described with sort of things like a stock exchange, these DeFi applications really walk and talk a lot like what you'd see in the normal regulatory structure of what the SEC is looking over. So Gary Gensler, who's the SEC chairman, said this week essentially that these applications are not immune from regulation in the U.S. They will be under the same structure. If they look enough like a traditional stock exchange, for example, they're not going to get away with not being regulated in the same way. He also called it a misnomer that some of these applications are decentralized, and he's definitely raising some red flags there. He also happens to be quite the expert when it comes to blockchain. He taught a class on blockchain at MIT, so he knows a bit about it, but seems to be paying pretty close attention there. Yeah,
that is very interesting. I actually did not know that. So basically, his take is you can run, but you cannot hide. Speaking of hiding and running and blockchain as well, Mackenzie, you cover crypto for CNBC.com, and Bitcoin in many ways was the first DeFi application, this idea that you can hold and send value anywhere in the world thanks to an electronic ledger that keeps track of everything. But right now, it's virtually impossible to live off of Bitcoin. Do people believe that that will change, that it will become just a much more prevalent part of our daily lives? And are you starting to see maybe some legacy companies, whether it's in the credit card space or banks, really kind of going headfirst into this area to make that possible?
Yeah, so a big trend that we're seeing in the world of crypto is people acquiring Bitcoin and other digital currencies through earnings programs rather than buying it outright. And one way they're doing that is by swiping their credit card. So you have Visa that's partnered up with Circle, BlockFi, and Coinbase. And Gemini has a card that's launching exclusively with MasterCard this year. And the perks are pretty enticing. We're talking no annual fees, earnings of up to 4% back in crypto and a cryptocurrency of your choice whenever you buy something. And what's interesting about this is that it gives people just with a passing interest in crypto a very easy on-ramp to accruing digital coins. And it's a trend that I hear is about to accelerate.
That's interesting. James, are you involved with crypto at all, or are you participating in any type of ancillary investments that may help propel this area?
Yeah, so at Altimeter, we've made a couple investments within the cryptocurrency space, right? Those bets include companies like Chainalysis, right, which is a blockchain data company. They include FTX, which is one of the largest exchanges globally, as well as companies like FalconX, which is trying to build the prime broker equivalent, or the Goldman Sachs, JP Morgan equivalent within the crypto space. We're incredibly excited about all the trends that are going on here. I think if you look over the last year, the level of institutional adoption that we've seen is as real as ever. And that includes everything from the card networks like Visa and MasterCard, right, to custodial firms like Fidelity and BNY Mellon, right, to index providers like MSCI, and even community banks, right, FIS, Fiserv, Jack Henry, those folks have partnered with NYDIG. So community banks and small regional banks can also offer crypto to their customers. So we're incredibly bullish about the next decade ahead in this space. We think the secular trends and shifts happening are very, very real, and we're excited to be a part of this.